Is the market okay? All right, we can look at this from three different perspectives. We can look at it from the Bitcoin perspective, the altcoin perspective, and also the S&P 500 perspective. Now, right now, as we speak, all three of these perspectives are intact, in my opinion. The altcoin perspective is under significant risk, okay? The Bitcoin charts are not looking too bad right now, and the S&P charts are not looking too bad, although there is a prominent bearish case to be made that is coming closer and closer into relevance as we approach the month of September, which is when the first interest rate cut is expected to be had. So I think the way I see the charts right now fundamentally is, just a kind of introduction to the video here, is we're not in a terrible position, but we really are pushing against our odds here. You know, we're really starting to push our luck. We have to move very, very soon. I mean, we've seen a consolidation of unimaginable, almost unimaginable, at least before this range period of time occur. You know, a consolidation that's lasted 113 days. It's almost 4 months of consolidation. And quite frankly, I mean, we're running out of time. You know, we don't actually have much time in which the macro environment or the macroeconomic environment is good. You know, interest rate cuts are going to be 3 months from now. If we're lucky, they're probably going to be 5 months from now. You know, and that's not a good position to be in, because we know for a fact that the pivot point of interest rates is generally when you see macro environments change. So we've got 3 months, okay, maybe 4, until that interest rate decision. And we're going to look into that a bit more extensively in this video. But you know, what we can look at right now, because we don't know for certain when that interest rate decision is coming, what we know for certain is the charts we have on hand. And we have the Bitcoin chart on hand, we have the altcoin charts on hand. We will look at the S&P as well and its correlation with Bitcoin in this video. But I just want to get a really brief rundown today. Like, what is the deal here? Because I did a YouTube community poll. And I asked the question, what are you doing here with altcoins? Okay, because altcoins are the things I'm most concerned about in this price region. Altcoins are the ones that are currently testing their critical macro support levels. And in some cases, in a lot of cases, actually, a lot of altcoins on an individual level have actually broken below their bear market support levels. Okay, so this is a very dire situation for altcoins. I said, what are you doing with your altcoins here? 52%, the vast majority, or the biggest minority, I should say, of people are holding, okay? Some people are buying, 32% of people collectively are buying, and only 15% of people are selling. Now, this is interesting. I find this interesting. Now, fair enough, right? We haven't broken those macro levels yet. Although I will pose to you that if you do, this is very heavily dependent on your personal situation. I actually don't blame people for selling here. I don't blame people for selling some. I wouldn't personally sell everything here. I don't blame people for selling some here. Because I understand that all we need to do is move upwards 10% again, and then we're back in that bullish position, and you can just buy back a little bit higher, right? So it depends on your personal situation. Do you want to risk losing another, certain amount, or do you want to just sell now, cut out the risk and buy back when it's in a good position again? I actually don't think either of those things are particularly bad options. Now, obviously, it's complicated a little bit, especially in Australia, because we have tax laws here that allow you to 50% capital gains discount tax if you hold for more than a year. So obviously, I'm personally in positions where I've been in them from, late October, early November, and it's coming to the point where, well, okay, I don't really feel comfortable selling these positions here because I'm throwing away all the progress I've made towards that 50% capital gains discount. That's another problem that throws in a spanner in the works. But on a purely chart level basis, I actually don't feel comfortable shaming people for selling here. And a lot of people in this market, they love shaming people for selling. I don't feel comfortable doing that here. I think it's not an irrational position at all. I think this market right now is clearly different to what it's ever done before. The 4-year cycle is clearly in the process of breaking. It's not broken yet technically, but it's clearly in the process of breaking. It's likely to break. And 4 months of consolidation during this part of the market environment, market cycle is not really what you usually see at all. I mean, there's no real point in which we've seen anything really that similar to this. On a structural level, okay, yeah, you can make the argument. We'll speak about that in a second. But yeah, I think, buying, sure, you can do that if you want. Holding, I think that's probably the most logical thing to do here. But if you're selling here, I'm not totally against you. I don't have a very polarizing opinion on what you should be doing here necessarily. What I do know is that when those levels break, I'm gone. I'm out. I'm getting out of altcoins because I don't want to risk gambling, really. Because if those macro trends on altcoins break, we will be gambling. But we'll speak about what those macro trends specifically are in this video here today. Now, what am I doing personally? I've trimmed coins that I don't like anymore, coins that have broken below their bear market lows. I've cut them out of my portfolio. And again, there's other reasons you do this that aren't just charts. For example, again, in Australia, we have tax laws that it means that you can basically harvest capital losses. So if you have a pool of capital gains for your financial year and you've got coins that are at a loss, you can sell them, grab the capital losses, offset the capital gains. Okay, there's reasons people do things that aren't just chart based. Am I holding most of my coins? Yes. Have I sold some of my coins? Yes, I have. The ones that look absolutely terrible, I've sold them. And that's not because I think the market's broken down and everything's over. It's just because those coins are clearly objectively screwed. And I don't see a circumstance in which those rise again. And actually, quite surprisingly, that is a pretty considerable amount of coins right now, in my personal opinion. So I suggest you look on an individual case-by-case basis on your coins and see which ones are actually literally dying. If they're below the lows they made in the 2022 bear market, or even if they're testing them, I mean, that is a sign of death. The market, since, the bottom at 15K, is up hugely. It's up 378%, 380%, okay? If your altcoins are retesting the lows they made in 2022, it's very unlikely they're going to be coming back from that. And I think, again, coming towards the end of a tax year in Australia, cutting those coins out of the portfolio and just culling the shit coins is probably a decent idea. So again, I don't have a massive opinion on selling, holding, or buying here. Again, for the most part, I'm holding. And we'll speak about those macro trends in this video. Okay, now, before we get into it, I know that was a long introduction. Check out the BitGet, the BingX, and Bitunix exchanges. If you're buying and selling altcoins, you're buying and selling Bitcoin, whatever it may be, you're going to need an exchange to do so. Okay, you're going to need an exchange that's historically safe. Neither of these exchanges have been hacked before, and have very low trading fees. Okay, again, all three of these exchanges meet those requirements. On top of that, if you sign up with my link, you will find in the description or pinned comment below, using my referral link, if you sign up with that link, you'll get a 15% additional trading fee discount that lasts your lifetime on that exchange. So go ahead and do that. You're helping out the channel. It's free of charge, and you're helping yourself by getting that trading fee discount. All right, let's start by jumping into Bitcoin here. Medium-term charts on Bitcoin. What is this range? Well, the range, in my opinion, is between 61,000, okay, this green line on the screen here, and around 72,000, okay? Now, you might be thinking, well, why am I not counting this 57K wick and this 74K wick as part of the range? My reasoning for that is very simple. The 74K wick was a deviation from the established resistance zone at 72, and the 57K wick was a deviation down to dynamic support zones, such as the bull market support band, the pi cycle center lines, and also another critical level, which is actually an ascending yellow line, as you can see on the screen here, that stems all the way back, cutting through the Bitcoin historical price action, stemming all the way back to 2011. So that's a very, very important line, and that was sitting at 57K at that period of time. And that's the reason we actually deviated below the support zone and retested that 57K region. So I don't consider 57K part of this macro range. I consider the bottom to be around 61,000, and I have that for good reason. If we go to the Bitcoin charts, we go to the weekly chart on Bitcoin, we see where the pre-all-time highest ever weekly candle close level was. It was at 61K, and that's also where the lowest weekly candle close of this range is, 61K. If we go to the monthly chart, for example, we can even go a little bit further here. Where was the highest ever monthly candle close in the prior bull market? Again, 61,000. So 61,000 is an important level right now because it is where a lot of historical static zones are for support, but it's also an important level because it's where those dynamic support zones that we deviated down to 57K to test are currently sitting. So bull market support band has trended upwards from 57. It's currently sitting at the lowest around 61. Same thing with pi cycle lines, okay? In fact, they're moving upwards above 61 currently. But I would say, just for clarity here, 61K is what I consider to be the low of this range. And for that reason, we don't see macro breakdowns during a bear market, okay? That's not during a bull market. That's not what you see. Even historically speaking, people say, oh, well, Bitcoin's seen these 40, 50% corrections in historical bull markets, and it's kept going upwards after that. The reason it did that is because it didn't establish a macro range yet, and that drop downwards was there to establish the macro range and actually retest the dynamic support zones. For example, bull market support band, if we go back to, let's just go back and take a look, actually. If we go back to the 2017 bull market, it's a great example. We have these huge impulses to the upside, and then these very swift crashes, massive impulse to the upside, a very swift crash, and it crashed downwards to, 39, 38%. And people say, oh, it did it back then, it can do it again. Well, I mean, again, the reason why we were able to crash that much is because the dynamic support zones that kept the structure intact were in that price region. We can't just randomly crash 39% at any given time in a bull market. That's not how the market works, okay? On every single crash, even you'll notice this, thus far, on each of these crashes here, we bottom out on these dynamic support zones. That's where we bottom. And right now, again, we're testing these dynamic support zones currently. So you can only go as far as the structure allows. You can't just go down randomly because we did it in the last cycle. And the structure right now allows Bitcoin to go as low as 61K. All right, so I'm not necessarily concerned about Bitcoin macro structure. I'm not. I am, however, concerned about altcoin macro structure, and we'll speak about that in a second. But what does Bitcoin need to do to get back into a decent position? Because right now, as you can see, it's actually broken below this kind of red box right here, which is the mid-range support zone. Acted for resistance right here, acted as support right here. We broke down below it, formed a double top formation. We need to get back above that. And right now we're testing it. We're threatening to see a resistance support flip and head further lower. So we're in actually quite a dangerous position on the medium-term basis for Bitcoin. And in order for Bitcoin to regain strength, I would love to see Bitcoin flip back above that price region, flip it for support, and head back upwards for retests there. And this is what I said at the start of the video. If you're one of these people who has sold your bags, if you're one of these people who's been selling and you are looking for a point in which you'd consider buying back, for me personally, the point in which you'd consider buying back, what I would suggest to you would be a flip of this resistance box, making it back into support or just breaking above it strongly. That would be a reasonable buyback zone, because that would be an indication that we are seeing a deviation right now, just like the deviation we saw to 57K before heading upwards, and we would head upwards again. Okay, so Bitcoin, in order to kind of achieve strength again, would need to break that 57K region. The 67K region. What about altcoins, right? Well, altcoins are in a bit more tricky position because altcoins don't have the room that Bitcoin has. I just told you that Bitcoin hasn't basically until 61K. It can go down a little bit more, technically speaking, on a macro scale. Altcoins can't do that, all right? Because we look at the trends for altcoins. Because again, we've already established in this video that it's the structure, it's the dynamic support zones that build up the structure that tell you how low you can go. All right. Now, that's the case for altcoins as well. It's the case for all charts. But the problem is the dynamic support zones and altcoins are being tested currently, unlike on Bitcoin, where they're a bit lower than where Bitcoin is currently. We don't have the space for altcoins, is what I'm saying. And that's what makes this situation very concerning and very pressing for altcoins. Now, what is the structural trend on altcoins? This is the altcoin market cap chart. It's the entire market cap of the altcoin market minus Bitcoin and Ethereum, right? So we have a 5-step pattern that is essentially the foundation of the structural trends for altcoins. You can see the first step was bottoming out. The second step was testing a bear market resistance zone. The third step was breaking that bear market resistance zone and consolidating on top of it. The fourth step was our final consolidation before breaching all-time highs and entering an altcoin season with a parabolic bull market. Now, one of the key characteristics of step 4, because again, we're seeing step 4 play out currently. So step 4 in the last cycle is a very good way to look into what's meant to happen on a step 4. And also the invalidation zones of what would make it not the same anymore and hence break the macro trend. So what are the key characteristics of step 4 in the last cycle? Well, again, it's following step 3, tick. But another one of the key kind of characteristics was retesting for support the pi cycle center lines, okay, in yellow and green. Or if you wanted to just break it down a bit more simply, because a lot of people don't know what pi cycle is, and that's not really a conversation I want to have today. It would just take too long to explain it. The bull market support band, that's probably something you're a bit more familiar with, or most people are a bit more familiar with, because people like Benjamin Cohen, who are very popular crypto YouTubers, talk about it very often, right? So bull market support band, you see, it was retested and held on the step 4 right here before going back upwards and breaching all-time highs, entering that parabolic bull market. Now, right now, unfortunately, it's not unfortunate yet because we haven't broken it yet. We are retesting this level, okay? But not only are we retesting it, we're actually hovering below it, right? You can see the last weekly candle closed within it. So yeah, cool, that's okay, we held it. But right now we're hovering below it. And that's not good news, right? Because it means if we close here, right, we're in a very dangerous position, which we threaten, or we do, break below the structural trend and invalidate this entire structure, right? This whole chart goes and essentially we clear it off and we start fresh. But the problem is there's nothing to start fresh with, because the entire structural trend that indicates we're going to be seeing an altcoin season with a macro bull market after this phase is reliant on that 5-step structural trend. So really, altcoins need to hold here. They need to get back above that bull market support band, close above it or within it, and go upwards as soon as possible. And if we see this weekly candle close below the bull market support band, that's very, very bad news. Now, what about in the mean term? Because the weekly candle closes in 3 days in 17 hours. So you might be thinking, well, I don't want to wait that long until I find out what's going to happen. Well, you can look at this uptrending blue line here. This is a support line that stems backwards all the way to November last year, which is basically when altcoins started moving. It's been tested on multiple occasions, a very strong line. I would say personally that if altcoins were to break this blue trend line to the downside, I wouldn't see much of a path backward to recovery of that macro trend. I would see that as basically being the nail in the coffin for the most part. Maybe we can scan wick below it, retest the horizontal lows, but for the most part, if we break this structural uptrend right here, if we break that level, where are we going? Well, we're going back downwards, guys. We're going to go back downwards to retest these lower support bands at 520 billion, and that from the current price region will be another 15% drop for altcoins. And if you see how far a 15% drop for altcoins, I mean, it's been 20% to be fair, you see how far a 20% altcoin drop has dragged down the vast majority of altcoins in this current move so far. Another 15% will be detrimental. I mean, that would literally throw probably half of the top 100 underneath their bear market support zones. We are seeing a significant degree of altcoin dilution right now. I think that's one of the problems with altcoins at the moment. We see, for example, I read a Twitter post yesterday, and from what I can see, it's a reputable post, that we have 5.7 times the amount of altcoins circulating the cryptocurrency market than we did in 2021 bull market November. Okay, so again, 5.7 times the amount of altcoins as 2021. And actually less money than there was in the altcoin market in 2021 by a factor of basically 2x or half. So, of course, the altcoin market right now is being extremely diluted. And that's why you can see the altcoin market drop a mere 20% and many altcoins crashing below bear market lows, because the money is spread much thinner than it was in previous bull markets. And this is largely due to Solana meme coins, believe it or not. So yeah, altcoins right now are in a critical position. They need to hold this uptrending line in blue or the weekly chart level. Right now, it's not currently broken. I wouldn't consider the structure broken, but I would consider this to be a point of major concern. And there's no way around that, right? And that's why right now, I don't necessarily blame people for selling, because I do understand that you can literally just buy back a little bit higher if Bitcoin crosses over 67K and if altcoins maintain these weekly candle closes above this level. It's not really that deep for me personally. People, in my opinion, in cryptocurrency jump on massive bandwagons like, no, you shouldn't be selling here. You shouldn't. It's like, you don't know this guy's personal situation. It's like, I'm not going to sit here and tell people who need the money desperately to pay their rent that they shouldn't be selling here because this trend hasn't broken. It's like, you can literally just buy back higher. And if the assumption is we're going to be entering a parabolic bull market after this phase, yeah, okay, you're going to be buying back high, you're going to be missing some returns, but if the peace of mind is worth it, that's a personal decision you need to make. Now, as I said, I've cut losses, my losing coins, I've cut them out, but for the most part, I'm certainly holding my Bitcoin and Ethereum bag, because I don't see Bitcoin and Ethereum as under threat whatsoever at the moment. Now, moving into the last thing I wanted to talk about today, it's actually the S&P 500, okay? And you see in blue, we have the S&P 500 chart, and you see in orange, we have the interest rates, okay? Now, interest rate decision is going to be, there's one in July, but the one that's important is September, because right now there's a 59% chance that in September we will see the first rate cut. In fact, there's actually a 65% chance if we're including this data point over here. So the likely rate cut's going to be in September. It's been flipping around between November and September as a likelihood for a while now. So let's just say between September and November, we're going to see the first rate cut. We can see on S&P 500 that historically when the pivot point has occurred, when rates have been cut, that's generally when downtrends have begun, or at least reversals have begun, okay? And this is concerning because obviously if we see a rate cut in September, that means around that period of time, give or take a few months, and the threat there is take a few months. The threat there is maybe it starts now. That's the threat. And that's why a lot of people are concerned. That's why it's a justifiable concern. If altcoins and Bitcoin are under threat, the S&P could be as well. But anyway, that's another topic for another video, because I think we're going to get too complex and get bogged down in that topic, I think. But, if we do see a pivot and we do follow what happened in 2008 and the dot-com bubble in 2000, we could see a reversal here in the S&P 500 and markets in general, and a reversal of the profitable or the beneficial macroeconomic situation that has led to Bitcoin and altcoins go upwards. That could be flipped. Now, there's a lot of complications and nuances here, because we have seen for the first time ever the Federal Reserve do something unusual, okay? I mean, they do something unusual all the time, but for the first time ever, they've done something that they've never really done before. They raised interest rates during a downturn. It's never happened before. So we've got kind of a unique environment here, right? They've done something they've never done before. There's a unique characteristic, and yet we're trying to compare it to previous times where there was no unique characteristic. So fundamentally, we don't know what's going to happen. That's the simple truth. We don't really know what's going to happen. All we do know is that, generally speaking, interest rate pivots lead to interesting price action and potentially even price pivots. That's all we know. But we don't really know if that's going to apply this cycle. There's no way of really decoding that. But it is a threat. And if we look at the dot-com bubble that crashed, you can see the interest rate cuts actually... well, let's just say the price drop actually started a few months before the cuts even began. So if the S&P 500 starts dropping any time here onwards, basically, there is actually an underlying concern that that could be the S&P top. That's the threat right now. But again, there's no way to clarify anything. It could be a situation like it was in 2007, 2008, where the rates cut and then the market actually goes up for a new high before it starts dropping, or it occurs around the same period of time. We don't know exactly what's going to occur here. But we do know that whatever happens, the S&P 500 and Bitcoin are heavily connected at the moment. You can see it here in orange, this is the Bitcoin chart, and in blue we have the S&P 500 chart overlaid on top of each other, and it's essentially the same macro structure. Yes, you see these short-term deviations, S&P crashing while Bitcoin's rising. You see deviations all the time. In fact, right now as we speak, there is a deviation. The S&P 500 has moved upwards 8%, while Bitcoin has crashed downwards in the recent couple of weeks, which is why a lot of people are calling manipulation, including myself, and price suppression. But, again, on a macro scale, these charts are connected, so it stands to reason that unless there is a dramatic shift in the fundamental, economic factors that drive up the price action for Bitcoin, unless that occurs, which is a hard thing to predict, we will see, the markets follow each other, and hence if we do see a reversal in the S&P, Bitcoin will reverse as well. So I actually don't really like the situation we're in right now. I don't like it. I think it's very hard to navigate because there's a lot of things that have never happened before that are starting to happen, or at least threatening to happen. And it's very hard to know what to do in those situations. My conclusion is basically we just have to trust the charts, because the charts, as a lot of people seem to neglect, TA is an accumulation of FA and TA. All right, so people look at the fundamentals and they think, oh, I can just analyze the market based on fundamentals. No, you don't understand. The fundamentals are built into the price action. If something happens in the fundamentals, it is immediately reflected in the price action. So the charts are kind of like cutting out the middleman. If you just look at the charts, you're cutting out the middleman of spending all this time looking at fundamentals. I'm not saying you shouldn't look at fundamentals because they give you context to what's going on, but using fundamentals as a means to predict price action is irrational because the fundamentals are already implemented into the PA as soon as you see the fundamentals. So again, focusing on TA is cutting out the middleman that is fundamental analysis. But right now, again, the structural trends for Bitcoin are still intact. The structural trends for altcoins are being threatened, and it's very, very concerning. And we need to move upwards. Where do we need to go? We need to get above 67K on Bitcoin. We need to close above the bull market support band on altcoins. But most importantly, we need to hold, in the meantime, this kind of ascending support line in blue. It's a very pressing situation. If you're not concerned here, I think you are wrong. I think you should be concerned. Again, I don't recommend panicking. I know that's something that's not really easy to stop doing if you are doing it. But panic decisions are not going to help you here. You need to focus on the charts. You need to focus on the things that have got you this far. And in my opinion, those are the charts. So again, look at these key levels. Right now, as of current, as we speak, nothing's broken. I don't see macro sell signals yet. That's the conclusion, guys. So thank you so much for watching. I hope you enjoyed. Please go ahead. If you really enjoyed this video, 24 minutes of my work here. There's probably 3 or 4 hours of work in this video. Go ahead and leave a subscribe. Click the notification bell, click comment, write a comment, ask me a question, whatever it may be, and then leave a like, and it helps me out a lot. And more importantly, you know, BitGet, BingX, Bit2Nix, these are my sponsors for this YouTube channel. Sign up with my referral link. Go ahead and do that. You get a 15% trading fee discount. And alternatively, if you want altcoin trading signals, if you want more of a service from me, altcoin trading signals 4 to 5 times a week with a 77.51% historically tested win rate. You can gain access to that. And also a group chat that comes along with that membership there. It's on Telegram. You can see the link below. You can sign up to that group if you're interested. Check it out. And then finally, the Crypto Academy's bull market sale, right? We've got an educational course, my friend and I, Mega Whale Crypto. We worked together to create this course. It's educational about TA, crypto market TA, stock market TA, bull market sale for a limited time, discounted price. You can check that out. Guys, I appreciate you watching the video. I hope you enjoyed. Thank you for watching. Cheers.